Again, for those that are just joining us, please feel free to schedule a follow-up call. My phone number is 813-710-4123. You can also send me a text to that number. So let's look at the next opportunity we have here. So we have Mr. and Mrs. Giver. So we have someone who loves to give, and they are currently looking at doing a Roth IRA conversion. They're currently giving to various ministries, to their church, temple, synagogue, and mosque. They have investable assets over $500,000, which can be invested for the long term. So this is, again, kind of the scenario we're looking at, is they want to give, yet they'd like to reduce their taxes now. Again, they're trying to do a Roth conversion today, and they also have maybe some exercise stock options and a sizable bonus. So these are all reasons for this next example. However, again, the key to this solution is we want to reduce their high taxes right now this year. So if there's a way that they can accelerate the tax deduction for future giving to this current year, would you be interested? And again, this is something we want to look at. We've trademarked this at our firm, J. Ruppel Company. It's called the Commitment Giving Trust. So in this example, we put $100,000 into a stock portfolio. We are committing, in this scenario, we're committing to give money away for the next 5 years. So we're giving $25,000 to the charity of their choice, and it's given out on a quarterly basis. And after 5 years, this is an irrevocable trust for 5 years. Whatever that dollar amount is left over, that current value is returned to the grantor of that trust or to you as the investor. So now these are based off of AFR rates, which would be based off in July of 23. So these do change. So obviously get with us or get with your accountant. We would figure out what it actually would mean for you if you're trying to do an opportunity here with this couple weeks left in December. So in this case, we're able to give $100,000 away we're giving away into an investment opportunity. We're only committing to give $25,000 right now. If you do that, that current year tax deduction is $22,000. So again, they're able to take all that up front. So there's no, even though you're giving away for the next 5 years, you're not getting any future deductions because you're taking all that in the first year because you're committing in that irrevocable trust to give those dollars away. So that current tax savings, if you're in a 37% tax bracket, would be about $8,300. The future value of tax saved, so if we took that $8,300 and we invested it at 5%, again, not guaranteed, but you would have about $10,615 during that time period. And then a future value. So the other thing is we're freeing up $5,000 a year. So if we take that $5,000 that you're typically giving from and you're giving out of your bucket of money, then we're able to save those dollars for you. So that's where these calculations come from. Again, this is strictly for illustrational purposes. And it does provide, a nice thing is, to your church or charity, it lets them know on a quarterly basis they're going to be getting a check. And again, you can change who that's actually coming to. And this is just another example that you can do this on multiple years. So in this example, we're doing a commitment giving trust for a 20-year period. So again, the nice thing is we're giving $100,000 to a church or charity, 501c3. And in this case, again, kind of the same numbers I'm going to show you there is the charitable deductions that they're getting. Right now, that's a first-year deduction of about $67,000, almost $68,000. Again, that's going to fluctuate a little bit because that was based off the AFR rates of 4.2 in July. But ultimately, you're giving that money away. You're freeing up cash flow on a yearly basis. And again, we're not saying you have to stop giving, but nice thing is you're giving off of your own assets. And here's the nice thing is, we're not guaranteeing you're going to get your money back. But in the example here, if you're giving away 5% a year, the fees for this is about 2% on average per year. So if we can earn a hypothetical 7% per year, there's a good chance that you could get your $100,000 back. Again, that's absolutely not guaranteed. That's based off of market returns. But again, that tax savings you're getting this year on that's about $25,000 you're saving in taxes by doing this commitment over that time period. I just want to leave this disclosure slide up there. Kind of take a look at, again, this is a commitment giving trust. Or another term is a grantor's, the actual legal term is a grantor's leads annuity trust. which the dividends, interest, capital gains, this trust will be reported to the grantor annually as taxable income. Charitable deductions are limited to 30% of your adjusted gross income. Again, these are some opportunities there. So with that said, I do want to